Hey everyone, and welcome back for another deep dive with us. So today,
Mhm.
we're diving into something that's been kind of blowing up my news feed
Yeah.
lately. And honestly, it's a question I think every investor has probably asked themselves at some point. Is diversification like dead?
Mhm.
Like is it still the golden rule of investing? And it all started with this article by Mark Moss. I think you probably saw it, right? It's called Ray Dalio's Investing Strategy is a Trap: The Death of Diversification.
Mhm.
And it kind of shook me, because Dalio, I mean, we're talking about the founder of Bridgewater Associates here. Like his all-weather portfolio, it was like the thing, and everyone pointed to it as the ultimate way to build a portfolio that could like weather any storm.
Mhm.
And Moss is basically saying it's a trap.
Mhm.
And get this, he even claims that if you had just like ignored all that fancy stuff and just bought and held the S&P 500 for the past decade, you would have made like 4 times more than Dalio's portfolio.
Wow. That's a pretty bold statement, especially considering Dalio's, track record and everything.
I know, right? It's like, is everything we thought we knew about investing wrong?
Well, it is pretty wild to see Dalio's, strategy under so much scrutiny. I mean, this is the guy who built Bridgewater into the world's largest hedge fund.
Yeah.
And for years, like you said, his all-weather portfolio with its, mix of stocks and bonds and gold and commodities, it was seen as like the holy grail of investing, right?
Mhm.
It promised stability, consistent returns, no matter what the economy was doing.
Yeah, yeah, the classic don't put all your eggs in one basket
Yeah.
approach. But Moss is basically saying, hey, maybe that basket's got a hole in it. You know what I mean?
Sure.
He points out that Dalio's portfolio has only averaged like a 5% annual return over the past 10 years, which, I mean, 5% isn't like terrible. But then he hits you with the comparison. The S&P 500 delivered an 11% annual return over that same time.
Yeah, I see what you mean. That difference is pretty hard to ignore. And that's kind of the foundation of his argument against diversification. He's saying that by spreading your investments across so many different assets, some of which are inevitably going to, underperform, you actually end up kind of dragging down your overall returns. He calls it averaging into weakness, which I think is a really, really interesting way to put it.
Yeah, averaging into weakness. It's like you're diluting your wins with all these so-so performers.
Yeah.
Almost like imagine you're building a sports team, right? You could have a team full of like decent players in every position, or you could have a few absolute superstars and maybe some gaps in the lineup. It sounds like Moss is arguing for like the superstar approach, even if it means a little more risk.
Right, exactly. It's about, focusing on those high growth areas, even if it means, maybe concentrating your investments a bit more instead of spreading them out so thin.
Okay, so then, like, how do you even know what a superstar asset looks like in the investment world? Like, is there some magic formula or something?
That's the million-dollar question, right? And it gets to the core of what Moss is trying to get us to think about. Like, are we just clinging to this idea of diversification because it's what we've always been told? Or is it still the best approach, especially when you factor in things like, inflation?
Oh man, don't even get me started on inflation. That's like the silent killer of returns, right? Moss actually says that the real rate of monetary debasement, like how much our money is actually losing value, it's closer to 8.4% per year. So even if your investments are earning like 6% or 7%, you're still losing purchasing power over time.
It's like running on a treadmill, You're putting in all this effort, but you're not actually going anywhere.
Exactly. And then Moss highlights the assets that just like crushed it from 2011 to 2024, like Bitcoin, 144% average annual return. Then you've got the NASDAQ Q100 at 17.4%, and even the S&P 500 at a solid 12.5%. And suddenly, those like 2% to 10% returns from the traditional safe havens like gold and bonds, they don't look so hot anymore, do they?
Especially not when you factor in inflation, right?
Right. It makes you wonder if those safe havens are really living up to their name.
It's a good question. And Moss actually argues that one of the reasons diversification might not be working as well as it used to is because markets have become more, what's the word? Correlated. They tend to move in the same direction more often now. And he kind of blames this on central bank policies since the 2008 financial crisis.
So it's like even if you've diversified across all these different asset classes,
hmm
you could still be vulnerable if like the whole market takes a hit.
That's basically his argument. Yeah.
Okay, so now what? Like if diversification is potentially diluting my returns and it might not even be as safe as we thought. What are we supposed to do with our hard-earned money? Like, where do we even go from here?
Well, that's where things start to get really interesting because Moss actually offers an alternative approach.
Okay, I'm all ears.
He suggests that instead of, spreading yourself so thin across all these different assets, you should try to identify and invest in like those high growth assets.
Yep.
He specifically mentions Bitcoin and tech stocks as examples, but I think the bigger point he's making is about like shifting your mindset, from just trying to avoid risk at all costs to thinking about like how can you maximize your growth potential.
See, that makes me a little nervous, to be honest. I mean, putting like all my eggs in one basket, that just feels, I don't know, kind of reckless.
I get it. It goes against like everything we've been taught about investing, right?
Yeah.
But, Moss isn't saying you should like throw caution to the wind and just YOLO your entire savings into like the latest meme stock or whatever.
Right.
He still emphasizes like the importance of understanding the fundamentals of any asset you invest in. And he's very clear that this approach does involve higher risk, but with higher risk comes the potential for much higher rewards as well.
So it's more about being like more selective, more strategic about where you put your money, even if it means like concentrating your investments a bit more instead of spreading them out so much. It's funny. This is making me think about my own portfolio. Like I've always been told that real estate is like the safest investment, right? Yeah. But with interest rates going up and housing prices starting to cool off, I'm starting to wonder if maybe that safe haven is actually like dragging down my overall returns.
Yeah, I think that's a perfect example of how this conversation can apply to like anyone's investment strategy.
Yeah.
It sounds like you're already starting to question some of those assumptions that maybe you've held for a long time. And that's exactly what Moss wants us to do. He's challenging us to really think critically about like why we invest the way we do and whether our current approach is actually like serving our goals.
Yeah, no, it's definitely a lot to think about. I mean, on the one hand, diversification has been like the cornerstone of investing advice for like forever. But Moss makes a pretty compelling case that the world has changed and maybe our strategies need to evolve as well.
Exactly. And it's important to remember that there's no like one size fits all answer here, right? Like
Right.
the ideal investment strategy for you is going to depend on a bunch of factors like your risk tolerance, your time horizon, your financial goals. What works for like a seasoned investor with a high appetite for risk might be totally different from what's appropriate for someone who's, just starting out and wants to preserve their capital.
Right. Yeah, that makes sense. And I guess that's why like this deep dive feels so important to me. We're not giving financial advice here, but we are like raising questions and exploring these different perspectives that can hopefully help our listeners make more informed decisions about their own investments.
Absolutely. We're not trying to tell you what to do, but we want to give you the knowledge and the tools to think for yourself and to navigate this complex financial landscape that we're all in. And even though Moss is arguing against this like blind faith in diversification, he still emphasizes the need to be informed and to carefully consider your options.
So it's not about like throwing the baby out with the bathwater.
Yeah.
It's about being more and more intentional, more strategic, and maybe even a little braver in our pursuit of growth. But I still have one big question. Like, let's say I'm ready to embrace this new way of thinking, right? If I had to pick just one asset to invest in for the next decade, where should I put my money?
That is the $1 million question, isn't it? And it's one that only you can answer. But to help you, think it through, let's maybe flip the script for a second.
So instead of asking like, what's the asset, like the one asset to rule them all, maybe the question is more like, what are the big trends that are going to shape the next decade? And then which assets are like best positioned to benefit from those trends?
You got it. You're thinking like a true deep diver now.
Okay.
Moss's argument, it's not just about like picking the right stock or the right cryptocurrency. It's about understanding like the underlying forces that are at play and then positioning yourself accordingly. He's basically saying, don't be caught clinging to yesterday's winners while tomorrow's opportunities pass you by.
Okay, so instead of like spreading my bets across a bunch of assets that might be like losing relevance, I need to like identify those areas where the real growth is going to happen. It's almost like trying to predict like what industries are going to be the next Amazon or Google. But how do you even like begin to do that?
Well, it starts with being aware of like the macro trends that are shaping the world around us. Things like demographics, technological advancements, climate change, geopolitical shifts. These are the big, slow-moving forces that create both challenges and opportunities for
Right,
investors.
right. But how do I like connect those big picture trends to like specific investment opportunities? I mean, I'm not an economist. I'm not a futurist.
You don't have to be. There are tons of resources out there that can help you understand these trends and how they're impacting, different sectors of the economy. Read industry reports, follow thought leaders,
Hmm.
listen to podcasts like this one, and most importantly, be curious.
Okay.
Ask yourself like what problems are being solved, what needs are emerging, where are people spending their time and money? The answers to those questions can give you some really valuable clues about where the growth is likely to be.
Hey, that's actually super helpful. It's like you're giving me a roadmap for how to like think about the future and make smarter investment decisions.
Yeah.
So let's play this out for a second. Like, what are some of the big trends that you see shaping, the next decade?
Well, one that's impossible to ignore is the continued rise of technology,
Right. Yeah.
particularly artificial intelligence. AI is already transforming industries from healthcare to finance to manufacturing, and its impact is only going to accelerate. So, investing in companies that are developing or leveraging AI could be a really smart bet.
Right. Right. Yeah. And then there's the whole like sustainability movement. Consumers are becoming way more conscious about the environmental impact of their choices.
Yeah.
And that's driving demand for everything from electric vehicles to renewable energy.
Yeah.
So companies operating in those spaces could also be, well positioned for growth.
Exactly. And don't forget about the aging global population. That's creating a huge market for healthcare services, senior living facilities, products that cater to the needs of older adults.
Wow, this is really interesting. It's like you're opening up a whole new world of investment possibilities, and it makes Moss's point about the limitations of traditional diversification even clearer.
Yeah.
If you're only focused on spreading your risk across these broad asset classes, you might be missing out on some of these really exciting growth opportunities.
Exactly. It's not about abandoning diversification altogether. It's about being more strategic, more intentional with your investments. Ask yourself, like, are my current holdings aligned with the trends that are shaping the future? Or am I stuck in yesterday's paradigm?
Yeah, that's a really powerful question, and one that I'm definitely going to be asking myself as I kind of reevaluate my own portfolio. So as we wrap up this deep dive, what's one piece of advice that you would give to our listeners who are, maybe feeling a little overwhelmed by all this information and unsure about where to go from here?
Don't be afraid to be a beginner. Investing is a lifelong learning journey. Start by educating yourself, exploring different perspectives, and most importantly, asking questions. There are so many resources available from books and articles to podcasts like this one to online communities. The more you learn, the more confident you'll become in making decisions that are right for you.
Yeah, that's great advice. And I think it's the perfect note to end on. So to all our listeners out there, remember the future is full of possibilities, and you have the power to shape your own financial destiny. Thanks for joining us in this deep dive, and we'll catch you on the next one.